Hello traders, Gary Wagner here. It is 1:15 in Honolulu, 6:15 in New York on Thursday, 17th day of November 2022, and this is the Daily Report for gold and silver. As I address in today's opening letter, we could be witnessing not only a top to this recent rally in gold, which took pricing to an intraday high of $1,792 yesterday, but the beginning of a correction that will take gold prices lower. Currently, we have gold at $1,762.80. That's after factoring in today's decline of $13 or 0.73%. Dollar strength today was certainly a component of the decline witnessed in gold. Although the dollar traded to a lower low today of 105.97, it is currently up by 0.38% and fixed at 106.555. Lastly, silver continues to give up value, today selling off by almost 54 cents, breaking below $21 per ounce, with the most active December contract currently fixed at $20.99, a 2.48% price decline. Traders, as you know, the last 6 months have really been characterized by a series of lower highs and lower lows. After hitting this high here in March, we had 4 instances right here, here, and here, in which each high was consecutively lower than the one prior to that. Lower lows, we had a series of 3 lower lows, and then we went to a triple bottom that occurred beginning in October and really culminating at the beginning of November when we saw a rally begin to commence. And what differed from this rally was the fact that for the first time since the 6-month decline, we had a high that was above the last high. In other words, a higher high after seeing all of these lower highs. There's 2 questions we must ask. First, does this signal that a correction has began? And secondly, if that's the case, where could we see gold to before it ends this correction and moves back into another leg of the rally? The first thing I want to look at is a daily chart and to look at what occurred when we hit the highest value during this leg of the rally. That occurred 2 days ago when we saw gold trade to a high of $17.92. This is very much like a shooting star. For a shooting star to be identified correctly, the upper tail needs to be at least 3 times the size of the body. We do meet that qualification. It has to occur after a defined uptrend in the market. That is definitely relevant. The only thing is that we do have a small lower wick. That is acceptable. And lastly, it must be followed by confirming candles, meaning red candles taking prices lower below the low that occurred 2 days ago. We have seen that, which tells me that we have a high probability that we are in fact looking at the beginning of a correction in gold. This last chart that we are going to look at on today's show is a 480-minute candlestick chart of gold futures. We can easily see the 2 prior highs, this being the last one that contained a lower low than the previous one. We had 4 in a row, and we can certainly see that on this last rally, we took that out considerably because that one came in at 1,738. We hit a top of 1,792. What we will need to see for absolute confirmation that we've now entered into a bullish rally mode rather than a bear mode is that if we in fact do see the market correct, depending on where it corrects to, that it is above the low of 1617 or 1621, which I think is quite plausible. And so for that reason, what we really want to do at this point is to look at an area that seems logical to adjust our price order to enter the market from the long side. We currently have gold trading at 1763.10. This recent pressure is really due to statements made by Federal Reserve officials stating that they will still have a hawkish monetary policy and continue to raise interest rates. That being said, the first level that is possible has got to be the 23.6% fib retracement. That comes in at around 1750. When we look at this chart historically on a longer-term chart, it doesn't really match up with anything, certainly not this last top. Below that is 1725, and that is based on the 38.2% Fibonacci retracement. And then there is the 50% retracement. It is not a Fibonacci number, but is used a lot in stock trading, coming in at 1704. I think that these are the three levels we want to focus upon. Currently, we have an order to buy at 1743, which for right now we are going to leave as we address what happens over the next couple of days. We only have one more day for the week, and then, of course, into trading next week. If we see any challenge of this price, it would get filled, and we would hope our stop would hold, and then to see it move up. But I want to be very cautious because this market has moved up much higher than originally anticipated, and because of that, the correction could easily be a little bit deeper, and that's why I believe 1725 to 1730 might be an area where this correction concludes. More to follow tomorrow as well as next week. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the weekly wrap-up and review. Bye-bye.